So ladies and gentlemen, please welcome to the stage on Sunday morning, Mr. Daniel Katcher.
Good morning, everybody. Good morning. Thank you very much. Can I get a quick show of hands? How many people here own shares or have owned shares at some stage in your life? Oh, great, virtually everybody. Who's never ever owned shares before? Quite a few, okay. And who's ever heard of options before? Lots of you. Who's actually traded options? Oh, okay, a few of you anyway. Who's ever heard of CFDs before? Lots of you, okay. And who's actually traded CFDs before? Oh, only a few. Okay, so who's heard of options and CFDs but doesn't really know what they are, and hence probably why I came along here today to find out more. Okay, brilliant. And who's never even heard of options or CFDs before? A few of you. And who did not know they were coming to an option and CFD seminar? Here's another question for you. Who's interested in building their wealth? Oh, of course. All right. Now, in order to build your wealth, is it important to have a higher paying job, or is it better to have multiple income streams? Multiple income streams, sure. So what we're going to talk about this weekend, of course, the whole weekend long, but also today, and what I'm going to share with you is, of course, some strategies to increase your income and hence overall build your wealth. Okay. Now, just before I get started, because I'm specifically talking about the stock market, in Australia we have what's called the Australian Securities and Investment Commission. So just a couple of things I just want to mention to you before I get going. And first off, what I'm sharing with you today is what we call general advice. I'm not specifically telling you what to do. I'm sharing with you in an education type format, general information. Further of all, I of course haven't taken into consideration your personal financial objectives. Obviously this is an information seminar. Today I'm going to show you a lot of trades that we're currently either doing or have done in the past. Okay, all the trades I show you are actual trades from the market. They're not hypothetical, made-up trades. But obviously the results we've had in the past don't necessarily mean we're going to get the same results in the future. We could in fact do better, or we might not do as well. And finally, my company, Platinum Suits, we're an authorized representative of my parent company, which is called Platinum Suits Group, which holds an Australian financial securities license. Okay, that's enough information about that. Let's get started with the program. Now, what happened in the stock market about a year ago? It crashed. It didn't just crash. What did it do? It melted. It didn't just melt down. What did it do? It fell more. The stock market in September, October last year fell more than what period? Than ever in our lifetimes. It was the biggest stock market crash in our lifetimes. Okay. How many people here lost money in the stock market last year? Right? How many people still have losses in their accounts from last year? Right? A few people. All right. Who heard that there was over $10 trillion lost in the global stock markets around the world, people around the world, right? Or numbers to that effect, some huge, ridiculous number, right? Now, my question to you is, was $10 trillion actually lost? No. Does it no longer exist? No, what did it do? It changed hands, didn't it? It moved from the people who used to have it over to the people who what? Who now have it. Correct. Now, the media, of course, didn't talk about the people who made $10 trillion. The media only talked about the people who what? Who lost $10 trillion. Okay? Now, is it possible, let me ask you, is it possible to make a profit in a rising stock market? Yes. Sure. Who knows that it's possible to make a profit in a rising stock market? How would you do that? Buy shares and sit on them, right? Share price goes up, make a profit. Cool. Now, is it possible to make a profit in a falling stock market? Yes. How many people here know that it's possible to make a profit in a falling stock market? Everybody. Okay, how many people here know how to make a profit in a falling stock market? Okay, not so many people. Okay, how many people here did make a profit in the falling stock market? 4 people. Okay, so you do appreciate there's a big difference between knowing something's possible, knowing how to do it, and then what? Actually doing it, correct. All right. So what I want to do is I want to share with you some of the trades that we did during that time period. At a time when the stock market was crashing more than it's ever crashed in our entire lifetimes, we personally had the single greatest trading time of our entire careers. So I want to share with you some of the trades that we did during that period, and then what's happened since September, October last year in the markets. They've rebounded enormously. We've had an even better year this year. So I want to share with you what we were doing last year, but also what we've been doing this year. Okay? Now, during that time period now, September last year through to January early this year, particularly when the market was crashing, I'm going to show you some of the actual trades that we were doing. So I'm going to show you the screenshots of our trading accounts. All right, now, just to give you an idea, you could have traded the same trades that I'm going to show you with $500, $1,000, $500,000, $5 million, $50 million. The amount of money you have to trade is actually immaterial. What's important is the actual percentage returns that you make on the trade. Is that fair? Because whether you put $500 on it or $5 million on it, you can still make the same 10, 20, 30% return. Is that cool? Okay, so focus on the percentages. Now, these particular accounts I'm going to share with you, we only engage about 17 to 20 odd grand. These are small accounts that I use specifically to demonstrate to people the trades that we're doing. I have larger accounts, but I don't show those accounts to a brand new audience like this. The main reason why I don't is because when people see our larger accounts, they tend to think, oh my gosh, I need to have that much money to trade. Well, no, you don't need, you can do the exact same trades we do with $500 just as easily as someone else might do with $5,000 or $500,000. Make sense? These particular accounts, we engage somewhere between about 17 to 20 odd $1,000. You could have done a lot less, you could have invested a lot more. It doesn't really matter, okay? So here we can see during that time period, this is the S&P 500 index. This is the top 500 companies in America squished together into one averaged out price. And we can see that during that time period, particularly September, October last year, that the entire value of the market dropped about 40, 50 odd %. Now that's massive. That's not just one stock. That's the entire value of the top 500 companies. That's the biggest stock market drop we've seen in our lifetimes. So during that time period, these are some of the trades that we were doing. Now here's our account, or one of our accounts. You'll see here it says negative $19,000. Now that doesn't mean we've lost $19,000. That means that's how much money we've engaged on these particular trades. The actual profit and loss is down in that column there. Okay, so you can see from that point we made one trade made $4,000, one trade made $49,000, 18 odd thousand, 2,000, and 2,000. So from an investment of about 20 odd grand, in about a 3-week time period, made about 350% profit. Here's another account. We engaged just over 19,000. This one made $3,000 on one trade, $76,000 on another trade. We lost $143 on one trade. This account we engaged just over 17,000. One trade made $159,000 in about 3 weeks. One trade lost $18,000. Now, who here would be quite comfortable losing $18,000 on one trade if you made $159,000 on another trade in the same account? Okay? Because you appreciate making a profit in the market is not about making a profit on every single trade, is it? No one can get it right every single time. The concept is to maximize your profits and to minimize your losses. Sure. Okay, I'll show you another trade now. This one's a slightly larger account. One trade made $250,000, $5,000, $12,000, $40,000. All right, and this was all during a time period when the media was telling you it was the worst time ever to trade the entire markets. I mean, we had a fantastic field day. Because understand, markets don't lose money. It's just what? It just moves around. It's only lost from one person's point of view. Other people are what? Making money during that time. Now, who's ever heard that during times of high financial uncertainty, when the markets are really scared and they're really moving violently, that a lot of people get scared and put their money into gold and silver? Who's ever heard of that before, right? Or that gold and silver are a hedge against inflation, correct? All right, so who would like to learn how to trade gold and silver? Right? I'm going to show you how to do that today. Now, here's one trade. I opened up this account just to do one trade on silver. And I actually prefer trading silver over gold, but they're both the same sort of thing. People move money into precious metals in times of high financial uncertainty. So one trade, we engaged just over $20,000 on this one trade. It made over $291,000 in 3 months. Okay? So my purpose here today is not to brag to you about what we do financially in the markets. My purpose here is to show you that this volatility creates opportunity. Right? The amount of money that's moving in the market is just changing hands. What we want to do is recognize where the money's flowing and then stand as it comes towards us rather than stand while it's going away from us. Make sense? All right. So the benefits of what I want to share with you today is that what I'm sharing with you is actually very easy to do. Right? Anybody here can learn how to do it. We've had people as young as 10 years old right up to 89-year-old grandparents do our programs and learn what to do. And no prior experience is required. All of you will understand what I'm going to talk about today. We're going to talk about how to build wealth in the market using what we call leverage. And that's simply the idea that you can control about 10 times more money in the market than you would normally be able to control yourself. Or in other words, you can control 10 times more shares than what you would normally control just by buying the shares yourself. So what's the benefit of that? Right? If the share price goes up 10%, how much profit do you make? 100%. That's right, because you're controlling 10 times more shares. Great. Okay, so sounds pretty good. You want to go and do this. You listen to me today. You go home. You open up your account. You want to start trading. Where is the money going to come from for you to start trading? It's going to come out of your pocket, right? To put the money into your account, it's got to come out of your pocket. Now, how did the money get into your pocket in the first place? You've worked hard for it. Okay, so you got blood, sweat, and tears to put the money into your pocket. You're not going to take the money out of your pocket to put it into the stock market to hopefully make a profit. Is that pretty much where we are right now? Okay, sure. So let me ask you, how would you feel if you lost half of that money? Ooh, pretty bad. How would you feel if you lost all of that money? Ooh. How would you feel if you lost all that money and more, and you're paying interest on all that money as well. Who's really excited about trading the stock market now? Not so many people. Okay. So what we're going to talk about today is how we can build wealth using leverage. Because you understand that if you want to build wealth quickly, you need to use leverage. Does that make sense? All right. So the market goes in your favor, you make a big profit. But we're also going to teach you today how to have downside capital protection. In case the share price goes the opposite way than we expect, we're going to get most, if not all of our money back. Who thinks that sounds pretty interesting? All right. So who'd like to learn how to make 10 times more profit if they get it right, but get most, if not all of your money back if you get it wrong? Sounds good? That's exactly what you're going to learn today. We're also going to quickly talk about how to have a regular, consistent, passive monthly income. Who'd like to retire? Now, what do you need in order to retire? Not just money, because if you spend the money you have, eventually you run out, correct? What do you need to have? You need to have an income, cash flow. You need to have a regular, passive monthly income, correct? Can you get a regular monthly income out of the stock market? Absolutely. Okay, so I'm going to share with you how to do that as well. Now, I'm not going to spend too much time on that today because there are other speakers today who will share with you the same strategies that we teach as well. I'm going to focus on what I call the capital gain strategies. Who has a small amount of money, say $2,000, $3,000, $5,000, that they'd like to grow into a much larger amount of money, say $10,000, $20,000, $50,000, $100,000? Okay, because I find when I'm talking to an audience like this for the first time, most people have a small amount of money, $2,000, $3,000, $5,000, that they want to grow into $20,000, $30,000, $50,000 or more. Make sense? And once you've grown that money, then what I suggest you do is slice some of it off and move it into the income strategies. Okay, so I'm going to focus today on teaching you the capital gain strategies. Now, ultimately, I want to share with you today also how to develop a financially abundant mentality. Now, what is a financially abundant mentality? A financially abundant mentality is a state of mind that you can achieve where you know how to make more money than you'll ever need for the rest of your life without having to physically work for it. In other words, it's knowing how to make money for you, so you don't have to physically go out and make money for yourself. Now, who'd agree with me? That'd be a very powerful mindset to have. Okay. Now, the instruments that I happen to use, and I teach my clients to use, to develop that mindset happen to be options and CFDs. So as a consequence, I'm now going to share with you today and teach you how to use options and CFDs. But that's not why I'm here. And if I could teach you how to make more money than you'd ever need for the rest of your life by buying and selling remote controls, then I'd teach you how to sell remote controls. Right? The fact that we're here today talking about CFDs and options, they're just simply a tool. They're just an instrument that we're going to use. The real purpose of using them is to generate wealth and then do that over and over and over and over and over again so that you start to realize that you can make more money than you'll ever need without having to physically work for it for the rest of your life. And who would agree with me? That'd be a very, very powerful mindset. All right? And that's why I'm here. All right? That's why I'm here. That's what I want to share with you today. Okay? The actual strategies are just the instruments we're going to use. Ultimately, I do only have a couple of hours here with you today, so my role today is to teach you how this works, share with you how it works. If you want to then take it further with me, then I will share with you how you can do my training and programs, but there'll be no hard pressure. It's not my style. My role today is to teach you how this works. If you want to come and do my programs, that's fantastic. If not, you're still going to get a fantastic education here this morning. Okay? Now, what you're going to learn then is some very powerful techniques. All the strategies I share with you, all right, combined, take about 15 to 20 minutes per day to do. Who here has about 15, 20 minutes per day they can devote to building their wealth in the market? Okay, that's the commitment you need to do. So what you'll find is what we do is very passive in the market. Because if you're spending more than 20 minutes a day on any financial endeavor, what do we call that? It's a job, isn't it? It's a work. All right, who here has a job? Ooh, my condolences. Anyway, if you've got a job, you realize that you're trading your time for money, correct? What I'm talking about today is learning how to make your money make you money so that you can spend your time doing something else. See the difference? Okay, who agrees that that's a really intelligent thing to be focusing on? All right, I agree. Okay. Now, my company, Platinum Suits, we're based down in Sydney. Okay, we're a group of people, 20-odd people, totally dedicated to helping other people like yourselves build wealth in the markets. We've taught now over 100,000 people these particular strategies around the world. Can't believe I've done that many seminars, actually. We produce what's called the Daily Trading Report. And this is the real guts of what we do. Because if I was to teach you how to ride a bicycle, right, I could have 12 different bicycles up here on stage. I could have Lance Armstrong show up and talk to you. But you're not going to understand how to ride a bicycle until when? Till you get on it, right? And what's going to happen the first few times? You're going to fall off. But now you're going to have a whole team of people around you to lift you back up, motivate you, coach you, teach you how to do it, kick you in the bum, make sure you do it. And if you focus at it, what's going to happen? You'll get better, right? And if you really focus on it, you can become really good at it. It's the exact same thing with trading. No one is born a good trader. Right? You can just become a good trader. Right? But in order to become a good trader, what do you have to do? You have to trade. With real money. You have to trade with real money. All right? Now imagine yourself, if you say you came to a 3-day training course with me, and let's say that's all we did. Okay, we give you a 3-day training course and see you later. Good luck to you. All right? And you're now at home in front of your computer, with the computer on, money in the account, mouse in your hand, finger on the button, ready to place your first real live trade with real money. How are you going to feel? We know that. We train 100,000 people. So we've discovered that the single best way to teach you, right, is what you need to do is you need to trade. But if you're too scared to place the first trade, the best thing we can then do is to show you what trades we're personally going to put our own money on 8 hours before we actually place the trade. So I have a whole team of analysts, and my head analyst, a gentleman named Brad McFadden, used to work at a major bank, and he was involved in a team that managed over $1 billion fund for the bank. Right? And he didn't like the bureaucracy of the bank and left the bank, joined our organization. He heads up our entire analyst team. So he and his team and myself, we look for trades every single day for us to put our own money on. Every trade we show you, we're putting our own money on. It's not just a tip sheet giving you like a recommendation. We're actually showing you the actual trades that we're doing. Right? So we're going to show you what trades we're going to do before we actually place them. And then we update it every day telling you what we're doing. And then we tell you when we're going to get out. We send you text messages, emails, we put it on our website to show you when we're getting in and when we're getting out. Okay, it's called the Daily Trading Report. So you don't really have to think. Okay, you do our training program so you understand what's going on, and then you look at our report every day. It takes about 5-10 minutes a day to read the report. You log on, put in your username and password, and then you're going to see all the different trades we're doing. We teach you a whole series of different strategies. Covered call writing, so like share renting, naked put writing, so insurance selling, so all the income strategies, as well as all the capital gain strategies, the strategies of growing small amounts of money into much larger amounts of money. We show you long-term buy and hold, short-term trades. If you actually click on the code to the stock, it actually takes you through and shows you a printout of exactly why we're placing the trade. So we're not just telling you what we're doing, we're teaching you why we're doing it along the way. What's more, we show you the income strategies we're doing. We show the capital gain strategies. We also show you the short-term and the longer-term trades. You'll also find that we don't just trade the stock market. Right? When it comes to the stock market, we trade both the US and the Australian markets, but we don't just trade stocks. Right? We also trade the commodities market. So what are commodities? Wheat, gold, silver, oil. I love trading oil, gas. Right? We also trade the currency market. Okay, so the Aussie dollars, US dollars, Japanese yen, and we also trade the equity or stock markets. So we look at all these different markets, we trade all these different instruments, and we teach you how to understand all these different markets and trade all these different markets from both capital gain points of view and from an income point of view. We also show you the percentages we're placing on the individual trades. So we don't tell you how much money we're putting on each trade, because frankly that doesn't matter. Some people put less money on it, some people put more money on it. What's important though is we show you what percentage of our account we're actually putting on each trade. So you can see that one down the bottom right called DBC. Right, we're putting 15% of our entire portfolio on that one trade, which is more than we're doing on any other trade. So if you saw that, right, would you then have the confidence to put more money on that one particular trade because we're putting more money on that one particular trade? Sure. And so we're going to tell you when we're getting in. If we're getting out of a trade and we're SMSing you and text messaging you and emailing you and on our website, we're saying we're getting off this trade in 8 hours' time. Might you want to get off the trade too? Right. So again, you don't really have to think, right? You just piggyback. Okay, you just look at the trades that we're doing and you decide for yourself whether or not you want to do the same trades. So we're not telling you what to do, we're telling you what we're doing. And I think that's far, far more powerful. And every single trade we do, we put real. I don't know of another company in the world, in fact, that actually has the confidence in their own trading to actually show their clients exactly what trades they're doing before they do it with real money. We've been doing this for over 7 years. We have a fantastic track record doing this over all this time. So our ultimate mission then is to teach regular people like yourselves how to build fantastic wealth in the market, right? By not just teaching you, but also demonstrating and showing to you on a daily basis. Myself personally, I was born in Canada, hence the accent. Okay, not American. Okay. Put the knives away. Who's you ever heard that Canadians hate being called Americans? Yeah, I never took offense until George Bush. All right? Once George Bush came out, oh, not American, okay? The good side. Now, but funny enough, I came to Australia 20 years ago, to the Gold Coast, in fact. I actually moved to the Gold Coast with my family when I was 16, did 1 year of high school here on the Gold Coast, went up to Brisbane, did University of Queensland, majored in neurophysiology, brain research, amazingly. Went into real estate, had my own real estate practice here on the Gold Coast for 5 years, and then at mid-1990s, 1997, became fascinated with the stock market. Because you might remember that in mid-1990s, real estate was pretty sluggish, but the stock market was really heating up into what became known as the tech boom by the late 1990s. But in the mid-1990s, I didn't know anything. So I actually met this retired fund manager, and the two of us formed a company together called MetaShare International. We ran that company about 3 years. He unfortunately had a stroke, so we sold the business. But I started again after meeting a gentleman named Tony Robbins. Anyone here ever heard of Anthony? You've all heard of Anthony Robbins, right? Tony Robbins. I met Tony back in 99, 2000, and actually got to know him personally. And he invited me to come and speak at his Wealth Mastery event. So for about a year, I spent time teaching options trading in both Singapore and Australia, all around the world with Tony Robbins, teaching people how to trade options. So I started Platinum Pursuits off the back of that experience, and I've been running Platinum Pursuits now for about 8 years. Initially just as a hobby, because I retired when I was 27. I thought, I'll spend a bit of time teaching, but over the years I really, really enjoy sharing this information, and so now I've taught people all around the world these particular strategies. And about 4 or 5 years ago, my wife and I had a daughter, came back to Australia, and so I've been really focusing just on the Australian market for the last 5 years, as I've been sort of staying closer to home with our little baby. Today I'm a fully accredited stocks options CFD advisor. I've got well over 16 years experience now trading in the markets. I write a variety of different articles and columns for various different newspapers and magazines around Australia. I write a variety of books. Okay, you might have seen this one in the bookshops. This book here, Taming the Beasts. I wrote this one last year because we saw the stock market crash coming about a year before it actually hit. So I wrote this book specifically last year to teach people how to make a profit and how to protect themselves in a major stock market crash. Now, the book came out in October last year, 2008. I think they invented the stock market crash just to help me sell the book, because it came out at the exact same time the stock market crashed, and it helped propel my book to the top five selling book in Borders last year, which was pretty cool. My latest book, Financial Abundance for Life, this one's more about the financial abundant mentality, psychology side of making money that I was mentioning before. Who played the cash flow game last night? Robert Kiyosaki's game, right? Well, it's tonight, is it? Who's ever played cash flow before? Okay, who's ever played Monopoly before? Everyone's played Monopoly, right? Who enjoys learning financial strategies in a board game style? Yeah, me too. So I invented the world's only options trading board game. This is a great game, if I do say so myself. This game comes with a DVD to teach you all about options trading and how to play the game. The other DVD has over 1,000 different trading opportunities. So the difference, cash flow and Monopoly are fantastic games, but you do realize when you play the games that they are make-believe type scenarios, right? The difference with this game is as you're playing the game, you're actually playing real-life prices. So it's actually more of a training program to teach you all about options trading wrapped up in a board game style. We sell this game for $199 on bookshops and online all around the world. But far more importantly, I'm just a guy, right? He just happened to throw himself into the stock market at a young age. Actually, a local boy, grew up here on the Gold Coast. Did very well financially in the tech boom. Did even better in the tech crash. Retired when I was 27. Met Tony Robbins. He invited me to come and speak. So since then, I spend about 4 to 5 months of the year sharing this information with those who want to learn. I spend the other half of my life in my own personal leisure, charity, spiritual, and family interests. Okay, that's enough about me. Let's get started about the market. Now, you've no doubt noticed that the American and the Australian stock markets have become more volatile in the last year than they have been the last, ever, basically, in our whole lifetimes. Now, here again is the S&P 500. This is the top 500 companies on the U.S. market. And we can see that collectively, back in May 2006, the overall market fell about 8%. Back in May 2006. Now that was the biggest stock market drop we had had since the tech crash of 2000. That was then followed by one of the biggest, longest sustained rallies in the history of the US market up to the middle of 2007. That was then followed by an even bigger stock market drop in the late 2007. That was then followed by a total recovery onto an all-new high by late 2007, early 2008. That was then followed by an even bigger stock market fall in early 2008, followed by a partial recovery, and then leading into an even bigger stock market fall up to September 2008. Now, who can see a bit of a pattern forming here? Right? What's the pattern that's forming? It's going up and down, but it's doing what? It's up and down more. It's more higher and lower, isn't it? It's rising higher, it's falling lower, it's recovering more, it's falling even more. So the market's becoming more what? More volatile, right? And that's leading up into September last year. Here's October last year. All right? So you can see the difference, right? It's an absolutely massive drop. So that is the biggest stock market drop we've ever seen in our lifetimes. Now let me ask you, in order for the stock market to drop that much, what did we have to have a lot of? A lot of sellers, right? We had a lot of sellers and hardly any buyers, right? So who are all the sellers? Were they all mums and dads like us? Did we all get together on Facebook and all decide, okay, on the same day, we're all going to sell all our shares at the same time? Is that what happened? No, of course not. Okay, who were the major sellers? Institutions, right? The fund managers, right? So they didn't get together necessarily, but they generally spoke, when they saw the market dropping, they all reacted pretty much at once, dumping stocks in the market, selling all the stocks, converting their stocks back into cash. Okay, but it wasn't just the stock market that crashed. Okay, what happened to the real estate market last year as well, particularly in America, even here in Australia, but definitely in America? It crashed as well, okay? So institutions were dumping real estate. They're also dumping shares. Now, there's only 4 places that institutions can invest money. Same with us, right? You can invest money in the stock market. You can invest money in the real estate market. You can invest money in commodities, so gold, silver, oil, gas, that type of thing. You can also invest money in the bank. That's right, fixed interest, term deposit. Okay? So if you've got the stock market crashing, institutions are dumping shares, getting all the cash. Real estate's crashing, they're dumping all this property, getting cash back. What happened to the commodities market at the same time? Let's have a look. The crude oil price fell 76% at the same time. The silver price fell 55%. The cocoa price fell 42%. Orange juice fell 47%. Every single commodity on the planet fell close to 50% or more, except for gold. But gold still fell 25%. Okay? So it wasn't just the stock and real estate market. The commodity market got hammered as well. Institutions were dumping everything, converted all their assets back into cash. Now, there's only one place left to put the cash. Where'd they put it? In the bank. That's right. But these are the banks, right? So when Commonwealth Bank has money to put in the bank, do they go down to National Australia Bank? Open up a Super Saver account? No. Okay. Where do banks then put money? When they want to park the money, they put money into bonds. Okay, who's heard of bonds before? All right, what are bonds? Bonds are just a loan. You loan your money to somebody else. In return, you'll get your money back with interest, right? Now, there's 2 main types of bonds. Okay, there's corporate bonds, where you lend your money to a company like Microsoft. Right? How much confidence do you think there was investing money in or lending money to a company when the stock market was crashing? Not much confidence, okay? So the other type of bond is known as a what? A treasury bond. Who backs the treasury bonds? The government, that's right. Okay, so here's the performance of treasury bonds over the last 6-7 years. Now, normally, we don't talk about bonds, because when you invest in a bond, all you get is your money back with interest. And what have the interest rates been like for the last 10 years? Historically low, that's right. So historically, we don't bother talking about bonds.